Is there a smart investment that performs well and has the potential to outperform your full-time job? Well, today we are looking at the SMH ETF, a powerhouse in the semiconductor industry that's been turning heads with its impressive returns. The SMH ETF includes top players like Nvidia, AMD, and TSMC, companies at the forefront of technological innovation. With AI, 5G, and autonomous vehicles driving demand, the growth potential is enormous. So, how does the SMH ETF leverage these technologies to give better returns? Well, let's analyze it. The SMH ETF, also known as the VanEck Semiconductor ETF, is a standout investment vehicle that tracks the performance of the MVIS US listed Semiconductor 25 Index. This index is specifically designed to provide exposure to the most significant companies in the semiconductor sector, which is a cornerstone of modern technology. The ETF includes 25 of the largest and most influential semiconductor companies, offering investors a diverse way to tap into the industry's growth potential. Since its inception in 2011, the SMH ETF has delivered an impressive total return of 171%. This remarkable performance highlights the robust growth and profitability of the semiconductor industry over the last decade. The companies within the ETF, such as Nvidia, AMD, and TSMC, have been instrumental in driving this growth through their innovations and leadership in technology development. When compared to the S&P 500, the SMH ETF's performance is even more striking. The S&P 500, which tracks the performance of the 500 of the largest companies in the US across various industries, has also seen substantial growth, but not at the same pace as SMH. This disparity in growth rates underscores the potential of the SMH ETF as a high-performing investment option, especially for those looking to capitalize on the booming tech sector. But why semiconductors? Semiconductors are fundamental components that power the vast majority of modern electronic devices. These tiny chips are embedded in everything from smartphones and computers to household appliances and industrial machinery. Essentially, semiconductors function as the brains of electronic devices, enabling complex processing tasks and the execution of a wide range of functions. Their ability to conduct electricity under certain conditions while insulating it under others makes them incredibly versatile and crucial to the operation of today's technology. One of the most compelling reasons why semiconductors have been doing so well is artificial intelligence. AI technologies rely heavily on powerful processing capabilities to handle the vast amounts of data needed for machine learning and other advanced computational tasks. Semiconductors, particularly advanced processors and GPUs, provide the necessary power and efficiency to run AI algorithms effectively. Companies like Nvidia, AMD, and Intel are leading the charge in developing semiconductor technologies that enhance AI performance, making it possible to deploy AI in various applications such as healthcare diagnostics, financial modeling, and autonomous systems. Speaking of autonomous systems, semiconductors are also essential for the development and operation of autonomous vehicles. These vehicles, which include self-driving cars and drones, require real-time data processing and decision-making capabilities to navigate and operate safely. Semiconductors enable the integration of sensors, cameras, and communication systems that provide the vehicle with situational awareness and the ability to respond to its environment. Furthermore, the advent of 5G networks, which promise significantly faster data transmission speeds and more reliable connectivity, is heavily dependent on semiconductor technology. 5G infrastructure requires advanced semiconductors to manage and transmit vast amounts of data efficiently. These chips are crucial for supporting the increased bandwidth and lower latency that 5G networks offer, facilitating new technologies and services like smart cities, remote surgeries, and enhanced virtual reality experiences. The development of 5G is expected to further accelerate the demand for high-performance semiconductors, driving innovation and growth in the sector. Just as water is essential for human survival, semiconductors are indispensable for the functioning of modern technology. Without semiconductors, the electronic devices and systems we rely on daily would simply not exist. They are the underlying force that powers everything from basic electronic circuits to the most advanced supercomputers. Due to this, the global semiconductor market has experienced remarkable growth over recent years, reflecting its integral role in the technology landscape. In 2021, the market was valued at $556 billion, but projections indicate a rapid escalation, reaching an astounding $1 trillion by 2024. This dramatic increase underscores the escalating demand for semiconductors across various industries, which is why the SMH ETF is more important than ever. And what about its performance? The performance of the SMH ETF, which focuses on the semiconductor sector, has been notably impressive when compared to broader market indices such as the S&P 500 and other tech-focused ETFs like QQQ. Over recent years, SMH has consistently outperformed these benchmarks, highlighting the growth potential within the semiconductor industry. Comparing SMH to QQQ, an ETF that tracks the Nasdaq 100 index and includes 100 of the largest non-financial companies listed on the Nasdaq stock market, we see SMH holding a distinct edge. While QQQ includes a broader range of tech companies, from software to hardware manufacturers, it does not focus exclusively on the semiconductor industry. This focus is where SMH gains its advantage, capitalizing on the specific and high-growth semiconductor market. The limited overlap between SMH and QQQ, around 27%, ensures that investors in both funds are not excessively exposed to the same companies, providing a diversified tech investment strategy. The future projections for SMH remain positive. With the rising global demand for advanced technology, the semiconductor industry is set for further growth. Development in AI, the development of 5G networks, and the increasing use of electronic and autonomous vehicles are anticipated to fuel substantial expansion in this sector. The companies within SMH, including leaders like Nvidia, AMD, and TSMC, are well positioned to benefit from these trends, promising continued robust performance. It's also important to consider the potential risks associated with investing in a sector-specific ETF like SMH. So, let's have a look at that. Investing in the semiconductor industry can be rewarding, but carries significant risks and considerations. One major risk is the market's inherent volatility, driven by rapid technological advancements and intense competition, which can cause substantial stock price fluctuations. Companies in this sector lead to innovation, necessitating continuous investment in research and development to maintain competitiveness. This high level of investment, while crucial for growth, can also lead to periods of financial strain, especially if new technologies or products do not perform as expected. Another critical factor to consider is the cyclical nature of semiconductor demand. The industry experiences periods of high demand followed by potential downturns. This cyclical behavior is driven by various factors, including economic cycles, changes in consumer preferences, and the life cycle of technological products. For instance, the demand for semiconductors tend to surge when new generations of consumer electronics, like smartphones and gaming consoles, are released. Conversely, demand can drop sharply during economic downturns or when the market is saturated with existing products. This cyclical pattern can lead to periods of strong growth followed by significant contractions, impacting the profitability and stock prices of semiconductor companies. Geopolitical tensions also pose a substantial risk to the semiconductor industry. The global nature of semiconductor supply chains means that political and trade relations between countries can have far-reaching effects. For example, tensions between the US and China have led to tariffs, export controls, and other trade barriers that disrupt the flow of semiconductor components and technologies. These distributions can lead to increased costs, supply shortages, and delays in production, all of which can negatively impact companies in the sector. Moreover, the reliance on key regions for manufacturing, such as Taiwan, where TSMC is based, adds another layer of risk. Any geopolitical instability or conflict in these areas can have significant repercussions for global semiconductor supply chains. In addition to these specific risks, investors should also consider broader market conditions and economic indicators that can influence the semiconductor industry. Factors such as interest rates, inflation, and overall economic growth can affect consumer spending and corporate investment in technology, which in turn impacts semiconductor demand. The rapid pace of innovation also means that companies must continually adapt to new technologies and market trends, which can be both an opportunity and a risk. So, diversification, staying informed about market and geopolitical developments, and a long-term perspective can help mitigate some of these risks and capitalize on the opportunities within the semiconductor industry. But then, you need to adapt a long-term investment perspective when considering investment in the semiconductor sector. You see, the semiconductor industry is known for its rapid innovation and cyclical nature, which can lead to significant short-term volatility. Nevertheless, the future prospects are strong, fueled by ongoing technological progress and rising demand for semiconductors in numerous sectors. Investors can weather short-term volatility by concentrating on the long-term potential and capitalizing on the industry's overall growth trend. In addition, diversification within the semiconductor sector can help mitigate risks. While investing in an ETF like SMH provides a level of diversification by holding a basket of semiconductor companies, investors might also consider diversifying their broader portfolio across different sectors and asset classes. This approach can reduce the impact of sector-specific downturns and provide more stable returns over time. Moreover, staying informed and keeping up with technological advancements, market trends, and geopolitical development is crucial. The semiconductor industry is extremely dynamic, experiencing rapid changes that can greatly affect the performance of companies in the field. Regularly reviewing and updating one's investment thesis based on the latest information can help ensure that investment decisions remain aligned with the evolving market conditions. Without a doubt, the future potential of the semiconductor industry is immense, with AI driving a significant portion of this demand. As artificial intelligence continues to integrate into various sectors, such as healthcare, finance, and automotive, the need for advanced semiconductors grows exponentially. These chips are essential for processing vast amounts of data and performing complex computations required by AI applications. The ongoing advancements in AI ensures that semiconductor companies will remain at the forefront of technological innovation and economic growth. When compared to other emerging technologies like the metaverse, the impact of AI on the semiconductor market is more immediate and widespread. While the metaverse presents exciting opportunities, its adaptation is still in the early stages. In contrast, AI is already transforming industries and creating substantial demand for high-performance semiconductors. This makes the semiconductor sector a more compelling investment opportunity for those looking to capitalize on technological advancements. Investors seeking growth should consider the SMH ETF as a strategic addition to their portfolios. By providing exposure to top semiconductor companies, the SMH ETF offers a way to benefit from the ongoing technological revolution. With AI driving demand and the semiconductor industry's pivotal role in future technologies, the SMH ETF stands out as a promising investment for long-term growth. So now, what do you think about the future potential of the SMH ETF? Are you ready to invest in the booming semiconductor industry? Comment down below with your thoughts, and remember to give this video a thumbs up, subscribe, and turn on the notification bell for more amazing videos.